The Dow is slipping, oil prices rising, all of the factors that are more shaping the market trends. Brent Wilsey from Wilsey Asset Management joins us now to discuss investment strategies for the current market. How do we even start this interview?
Well, let's talk about what is going on. I mean, the NASDAQ, which are your high flyers, I've called them, they're down about 23% year to date. The S&P 500 down almost 13% year to date. So we are in a situation, I love to tell you, don't worry, Monday will be better. It will not be better. We're going to be in this for another few months here, but there are positives going forward. Now, let's talk about what's causing the problem. First off, we have the talk of a possible recession. I will say I don't believe it's going to happen. We're going to have a slowdown, but we look at the first quarter GDP, there's things that came in negative that'll come in positive this next GDP. And also, too, we have some good employment numbers. Just talked about 390,000 jobs created. That's a big difference from the 70s when we saw unemployment hit almost 8.5%. So we've got good employment numbers. If that lasts, we will not have a recession, I believe. Another problem, too, rising rates. The Fed is trying to close down or slow down the economy. That is hurting people, kind of puts fears in there. Also, your high flyers, they do not do well with rising interest rates. We have inflation. We talk about gas. We talk about food. It's really hurting people in their pockets. They're kind of concerned now. There are ways to kind of help with inflation, but right now it's on the top of their mind, and they're not thinking about investing. They're thinking about pulling out their investments, which may not be the right thing to do. And we got to talk about the war in Ukraine. That is causing the problems with the oil, causing just negative for people. We hate seeing the war. We hate seeing all these negative images on TV. So a lot of things weighing on investors right now that's causing people to pull out from their investments.
But you think this is going to go on for another how many months, if you had to guess?
Based on our portfolio is different than the markets. We don't invest in the indexes. We invest in good quality companies at good prices. So we're doing much better than the indexes. I believe we'll do much better in the last quarter. But I think for even people, you're probably looking at August, September, maybe October before we see a turnaround. So kind of put the seatbelt on there and be ready for things to...
When you say a turnaround, could that mean, are you talking about gas prices coming down, grocery prices coming down?
There's going to be a slowdown. I mean, right now, inflation is around 8.5%. It's not going to go to negative, drop down to 1 or 2%, but I think we'll see a slowdown to maybe 5 or 6%. Now we see improvements in the supply chain. We're starting to see more products in certain areas for retailers, so that's improving. Again, inflation is too much money chasing too few goods. We're getting more goods on the shelves in some areas, not baby formula and stuff like that.
Right.
But you're seeing other things looking positive, so that will slow down the inflation rate, feeling a little bit better in the last quarter of this year.
And people checking on their 401ks just going, oh man, and they're watching them tank. What's the mindset they should have right now?
Well, the mindset is, first off, is try to find a knowledgeable person to talk to. I mean, hopefully you have someone at your 401k that you can talk to, and they're knowledgeable, not just a salesperson saying doing asset allocation, go to bonds. We are not recommending bonds at all in the portfolio, because why? Interest rates go up, bonds go down. Do not be in a bond fund in your 401k. Also, to check to make sure you don't have a target date fund. If you're older, you're going to have a lot of bonds in a portfolio. So try to find a knowledgeable person you can talk to at that 401k. Ask your HR department, call the company, try to find out. And if you're talking to that person, say, well, how long have you been investing? What is your experience? Hopefully you're not talking to somebody that's been in the business for 1 year. That would not be good. And then also to look at your equity funds. If you have equity funds in there, what are in those funds? Do you have Amazon? Do you have Google? Do you have these high flyers? By the way, Amazon does have a 20-for-1 split on Monday. I want to point out that does not make that stock cheaper. It just splits it 20 times. Everything else splits as well. So don't think it's going on sale on Monday.
Okay. You also advise don't blindly hold on.
Yeah, this is one thing that I hear people all the time. Oh, don't worry about it, just hold on. No, that is not the right thing to do. If you have bad investments in your portfolio, check to make sure you have good investments. Understand those investments. Look at the valuations of them. Do you have what I call the high flyers? I think there's going to be more hurt on the NASDAQ going forward.
What specifically is a high flyer?
A high flyer would be like your companies trading at 30, 40, 50 times earnings. Tesla's a high flyer. Amazon's a high flyer. Apple's a high flyer. They're just way overpriced. The average over the last 100 years for the forward PE, price earnings, what you're paying for a company, is around 16, 17. Some of these high flyers still 25 to 35 times. too expensive. Stay away from those. Get out now before it's too late.
And wait for them, but they will come down, and that's when you want to jump on them again?
Well, they will come down, and you may not want to buy them. I mean, we always look at things, and we've had companies that we've sold years ago, and then we're buying them back. And Apple, Amazon could be a great business, but you're buying a business. Don't buy it blindly, and don't listen to these brokers say, don't worry about it, hold on. There's people from the tech boom that they did that. They'd still be holding companies over 20 years ago that have still not got back to where they were when they paid for them. So be careful.
Don't get emotional.
Don't get emotional.
It's all counterintuitive.
Right. It's all counterintuitive.
All right. Anything else?
Yeah, I mean, we just want to, oh, here is one thing that's very important I do want to point out. Read positive, informative information. I have in my desk a file called Good Reading for Bad Times. I read that stuff to keep me on track. I read good books from, Warren Buffett, from Benjamin Graham to keep you on track. So read positive things that are going to make you think about investing as opposed to all the negative stuff out there like, oh, sell and get out, buy gold, buy Bitcoin. No, don't do that. Make sure you have good quality investments and read positive stuff that's going to help you through the investment world.
Good advice. Brent Wilsey, Wilsey Asset Management. Any seminars coming up?
We do have one in July, but I tell people too, we have a great newsletter that we send out to people. Yeah, and they get that at our website, smartinvesting2000.com. Again, smartinvesting2000.com. And again, it gets you through these crazy times. Good reading.
Good to know the resources there. Thanks, Brent. Appreciate
You're welcome.
it. Teresa, back over to you.